Hello, in this video we are considering gross income. As you will recall from the introductory video on the personal income tax equation, gross income forms part of that equation and is actually a very important part of it. So in this video we're going to have a high level look at what gross income entails. So just quickly going back to that personal income tax equation, your taxable income comes by deducting exempt income and deductions and allowances from your gross income and specific inclusions, as you can see there. So we're zooming in on the concept of gross income in this video. Before we do that, let's quickly consider what income is more generally. So income is money or another asset that is received, and it is received usually in return for doing something. So that something could be working, and then you receive income such as salaries or wages, or you could be providing a product or a service, in which case you will receive sales or fees, or you could be investing capital, so giving a loan or buying shares, in which case you will receive interest or dividends. So that's broadly what income is, and gross income roughly fits with that concept, but gross income is specifically defined in the Income Tax Act, and the definition is actually a few pages long, but we are just going to look at the broad general definition and specifically the definition that affects residents. So gross income is the total amount in cash or otherwise that is received by or accrued to or in favor of a resident, and excluding receipts or accruals of a capital nature. If we run through those different parts of the definition, the total amount is quite self-explanatory. It's the total amount of income that must be included in your gross income, not a part of it. In cash or otherwise, so you can receive money, you can receive assets, or you could receive a right to receive money or assets at a later stage. So if someone owes you money, that income already accrues to you at the moment they owe it to you. And that links up with the next element where it says received by or accrued to. So you could say that when you do something for someone and they say they will pay you later, then the right to receive payment has accrued to you already. And then at that point already, that right or that income must be included in your gross income. So that's something important to consider always if you are receiving something on credit, as it can affect your cash flow if you have to pay tax on something received in this year of assessment, or at least a right received in this year of assessment, but when you are only entitled to receive payment of that right in a following year of assessment. The other element of gross income is excluding receipts or accruals of a capital nature. We will look at what of a capital nature means in a bit more detail in a later video when we look at capital gains tax. But for now, just note that receipts or accruals of a capital nature do not form part of your gross income. So looking specifically at the example of Stephanie, she works as a journalist and she receives a salary. So that salary forms part of her gross income. And she also works as a designer, a freelance designer, and receives fees for her work done there. And that also, of course, falls within her gross income. And both of those incomes that's how they fit into her income tax equation. They are part of her gross income. So that was just a quick high-level look of the concept of gross income. Remember, in this course, we aren't trying to train you to be a tax lawyer. We just want to give you a basic understanding of these concepts so you at least know kind of what they mean when you are filling in your tax return. So in the next video, we'll be looking at the next part of the personal income tax equation. Thanks.